what you're wearing outside.
Yeah.
That's a pretty good one. I might play that one again on a bit more of an exciting day. I mean, today's exciting, but it's just an extension of what we've had for the last 3 or 4 days. US dollar rallying on the back of US yields rallying. Anticipation of sharper Fed rate hikes. And just generally, general enthusiasm for the US economy now. I mean, it's just going full bore from pessimism to optimism in a week. I've rarely seen this before. We saw it with the FTSE post-Brexit. Where is that FTSE? Let's have a little look at that FTSE post-Brexit, just so you can see. We're bringing up the Dow Jones just so we can compare those relative moves. But, is it going to continue? Probably not. It can't be all one way. But he was on TV earlier today, right? He did a big 60 Minutes, and he was once again, he was different, right, to what he was in the campaign trail. So, you never know. You never know. Maybe this is actually the real Trump. He says he's not going to build a full wall. He's going to build fence for bits of it. He's still pretty hardline on deporting 2 to 3 million Mexicans. But the big thing, which was conciliatory today, was he's like, Clinton's are good people. I don't want to hurt them. Very odd things to say. It's almost like, for his supporters, they can't be happy with that. That was so vehemently. Alright, so what we're looking for is the daily reaction after the Brexit. So if this is anything to go by, we've got a couple more waves. That would take us to 20,000 on the Dow. If these moves were copied exactly. I mean, we're just here in this period here. Maybe here. A couple more waves here of buying could easily push through. Nick, do I have to ban another person in the chat, man? I don't know who this Homer kid is, but he's quite ridiculous the last couple of days. I think he's actually posting his trades. He's just putting them in the chat and then coming back later and saying he's winning. Not that we've seen that before, have we? Jesus. Look, do I suspect there to be some significant pullback from this? Yeah. Do I think he's going to say something as soon as someone challenges him? Yeah. Do you think he can get away with a peaceful renegotiation of trade with China? No. Right? I think this is some serious stuff that will happen. Is the contagion effect of populism in European Union going to cause global risk aversion? Probably. Okay, I mean, you got this Italian vote coming up now in a couple of weeks, and you've got the raising of interest rates. That rarely goes through without some. I mean, at this point in the cycle, when they raise rates in America, it's going to have big effects on emerging markets. You're probably going to see some risk aversion in some form. If we look back to what happened last year when they raised rates, have to go back to January. They seem to say that this was nothing to do with them raising rates, right? But look what happened in January. That was a huge fall. All right, that's nearly a 2,000 point fall. Let's just see the timing of what happens next in terms of that pullback. In terms of what the bond market has, the bond market's got an extreme bubble globally, right? Globally, and so the yield surging that we're seeing going on, not just in the US, but also in say Eurozone, it may end up being, you know, something which they lose control of, central banks, and then the unintended consequences of that is just high funding costs for everyone, which will be negative for corporates. You know, of course, long-term funding is done via these bonds. You know, so that maybe the age of the 0% interest rates are nearly over. People are hoping that growth and inflation will propel prices higher. But you know, we don't know. I mean, we're coming into a stage of this great economic experiment that we don't know how it's going to play out. And this, you know, Brexit vote plus Trump plus, you know, whatever happens in Italy, whatever happens with Le Pen in France, and the European Union project as a whole is still very hard to predict. Yeah. Tacos, I don't know, man. I don't know. I'll leave it up to Nick. I'll leave it up to Nick. I mean, I'll have a chat with Homer. I'll just let him know. I have a feeling he's a usual suspect. He types very similar to the last sort of crazies we've had. I don't know why he said 20. He should at least say 50. It's more impressive, right? Yeah, what could possibly go wrong, Steve? But we're going to find out. We're going to find out. I think they're going to lose some aspects, some control of monetary policy. They can't do QE really again. So, how are they going to keep rates low this time? You know, maybe we do start to get inflation that they've always wanted in big time, and then they've got a serious problem. And I'm not going to sit here and tell you I know what's going to happen. I mean, inflation actually is prices rising. You know, you might see the value of things, the price of things go up, but the real value, when you take away the interest rates, might be going down. But, I mean, we're here to bank money now. Okay, so what are the trades that we're into at the moment? We're into some long Aussie Kiwi, not just because of the earthquake and, you know, all the shenanigans that are going on with the Kiwi as it's breaking lower. I like the way it's forming, and I think this is going to be leading to that 107.50 retest and potential break, hopefully. The other way I'm playing Aussie Strength, and this is on the back of general positivity in the markets. Aussie outperformance compared to the pound this time. Mainly, I think the pound's overshot its recovery, and there's still significant negative news flow coming out of that country. So, pound Aussie is another trade. I'm selling into that rally. Pretty tight stop on that pair though. Yeah, we'll talk about that later, Homer. Mate, I'll talk to you in private, yeah? Just settle down. Settle down. Mexicans are still getting a lot of attention from traders. I mean, look, the pledge to build half fence didn't seem to slow down the Mexican selling. Emerging markets in general are getting wrecked at the moment. It's, you know, the US dollar is getting strong against everything, but the emerging markets are getting sold, you know, sharply. So if we're looking at, say, something like the US dollar lira, you'll see what I mean there. Just one-way action. Dollar index seems to be wanting to make a play for the 100. In fact, it just tested 100. Pretty key level. See what happens next couple of hours. Just off the big figure, we might see a little consolidation pullback. Gold's a little oversold, Euro's a little oversold, dollar yen's a little overbought. Would make sense for a day or two of pullback, but it doesn't seem to be the market that is doing the common sense sort of stuff. So I'm not standing in the way of the freight train just yet. Okay, I was there watching. I was opening the desk today, so I was there watching dollar yen this morning break that 107, and the push through was just tremendous. You could feel the stops just popping. Now that's leading to general yen cross surging, so Aussie yen is doing well, but surprisingly as well, Euro yen's doing fine, and obviously pound yen's okay in the current market. Alright, so the Euro yen's resuming its sort of upward trajectory, slow and steady, but something to keep an eye on. If the Euro yen can break to the top side out of this cluster, then you might see significant dollar yen overextension as well, or even just some support coming through on the euro, which seems to be a theme in many analysts sort of reports, thinking that the euro is going to stabilize towards that 105 level, whereas the dollar yen might easily break that 110. Basically, the yen's going to be the weakest of the G3. US dollar the strongest, euro the second, yen the weakest. And when you have everyone ganging up on one pair, it becomes a lot easier to play. The Aussie Kiwi is not too late to enter if you think it's going to 110, but if you're a short-term trader, then yeah, no, it's probably too late. You might get frustrated by the variance in it. The other trade that we've entered, and it's actually a double-sized trade, so one of my more aggressive trades is I'm into Euro Swiss. Okay, now it's been ranging between say 108 and 109, 20, 30. For around 6 months now. That was Brexit that day. Post Trump winning, it's actually been falling, even though risk has been on broadly. A very odd sort of price action. I just like the level. I don't think it's going to go down to new Brexit lows. I could be wrong, so I definitely have a stop on this particular one. But the Swiss, I mean, look, if there's any sort of canary in the coal mine about this rally, it's that the Swiss has been broadly outperforming, and that's very weird, yeah, in this sort of move. Probably to do with yields, but I haven't seen a good explanation for why the Euro Swiss should even be anywhere near down here. So I'm suspecting it's flow driven, probably some short term people getting the money into Switzerland. Trump won. Got to get your money into Switzerland. But broadly, I think that S&B is going to come out, help support, and we'll see some nice moves up. But I mean, what's really the situation here? Why is it not? Why is dollar Swiss not moving higher? I mean, it is, and once it breaks some key levels, we should see some Euro Swiss, nice movement, but. It's noticeable that it's not above parity. Okay, while the euro is below 108, I mean, it should be above parity for the same price. So it's noticeable lagged, but I mean, look, this is actually huge moves for the Euro Swiss. Like it never moves, right? It doesn't move much at all. So let's not get too excited. This is this is not the this is not Speedy Gonzalez stuff here. This is a daily chart moving 100 pips over 3 weeks. Right? It's nothing. So let's just see how we go here. I might chicken out and take profit 107.50, maybe 107.80 if it looks like 108's holding. But we'll see. I just love it. I'd buy that level all day. So I'm not afraid to double up on that. I would be chasing the Aussie lower here. Aussie has failed many times to break to the downside. I mean, the Aussie's future and fortunes are linked very closely with commodities. Now, commodities apart from gold and um, oil are doing pretty well. There was some concern here, from the news out of China that they're going to ban commodity trading on leverage. Now that would hurt some of the shell game that's going on over there. But just sell the Aussie when the stocks are rallying and Aussie yen's rallying. That doesn't make sense, not to me anyway. You might see it just broadly be pressured lower by the US dollar strength, but there's so many better pairs out there to be playing US dollar strength again. So let's just see if it stabilizes. If it does stabilize, we'll see a sharp little rally. I'm definitely not selling Aussie underneath 75 anytime soon, right? I mean, look, we break 74.50, that previous low. We get ourselves into a nice little range. I might sell rallies, but... And this is the pair we trade most, right? This is the pair that we trade 90% of the time. It's good that it's showing some life. We haven't seen life in this pair for a long time. But... yeah, let's not assume that the patient is alive just yet. You want to see more movement on a daily basis, get the average range up to 60-70 pips, then we can look to trade it a bit more actively. It's just, once again, there's too many better things to be trading right now than to invest your time in it. So gold's coming up towards that bottom from back in earlier this year, February and March. Yeah, look, it should settle down, it should slow down, it shouldn't just keep snapping lower like it has been. But with gold, it is a dangerous pair. Okay, it's very much flow driven, and sometimes those flows are hard to see coming through, and hard to predict the timing of it. So it's not the same as a currency. There is no intervention in this pair. If there is no liquidity and the banks pull their orders, then you can see sharp moves. Sort of like those spikes that you see here. These are big $100 moves that happen much more regularly on gold than in almost, than any currency I know of. Alright, what's the shop caller calling? I mean, short euro pound has been one of my favorite trades for a while. I think it's run most of its profit there, Homer. So you're looking at a pullback towards those previous levels. This is pre-Brexit, right? Much more stable. Will the Italian referendum and concerns about Europe continue to pressure euro? Yeah, but Brexit issues are real. So a bigger sustained pullback here requires the markets to start to ignore the Brexit news, and that's just very unlikely. Hard negotiations are still coming. A lot of this is on the back of a perceived brotherhood between the UK and the US. I mean, they may have that, and the UK might have that with, say, Australia and New Zealand. But what everyone really wants to see is progress between the UK and Eurozone. Okay, that's the important one. That's where you're going to get the big pound moves. So the pound's moved a lot. This looks like that short cover rally to the 105.90 level that we were targeting a few weeks ago. Now we've hit those targets. I think it's time to be cautious to negative on the pound. And so I'll be playing it like that. That's why I'm selling pound, buying Aussie at the moment. It was a great trade. Majority of the moves done. It may continue. I mean, this, but the last 100 pips is a lot harder than the first 400. That's for sure. All right, guys. Let's have a look at some of the trade ideas in the room. Got That's a special event coming up for you guys. New educator that's going to be working with the site. Very cool. Very cool. The old school guys, they have a feel for the market that us young guys from the internet age don't get. We never have understood. Yeah. They've learnt fear and emotions much better than we have. We just don't get it with some of our sitting here behind screens. When you're in those pits, let me guess, he's selling. Let me guess. Albanaz, what are you doing? Alright, it's a very short-term scalp, so yeah, it can work. It looks pretty dangerous. Looks pretty dangerous. Raul, keeping on selling. Yeah, that's nice. TP and take profit aren't there at the moment. Your stop is looks like about Rono 790. Okay. Hopefully your TP's worth that risk. Zars, we got a, what do you got here? Long on the pound. I think the pound's breaking lower, mate. I think we just talked about this one. Doesn't look nice at the moment for you. Probably been stopped out, yeah? Yeah, you would have been stopped out a little while ago. But this is one from earlier. Aussie yen. Range. I like it, mate. I like it. I think you're going to make money on that one. Stop loss and take profit, please, boys. Please. Tacos. Something new for us. I mean, look, the argument that the sell-off on the back of the earthquake is overdone and that Canadian dollar is going to get sold more as oil collapses, yeah. This was such a favourite little play out there. This is a huge trade in the market. The New Zealand CAD long. Perhaps the unwind might be bigger than you expect. It's New Zealand dollar component of this, which is your concern. I suspect we're going to hit the 200-day moving average at some point. I'd be looking more along the lines of Aussie CAD long. Yeah, that would be my favourite trade, but obviously I'm long Aussie Kiwi. So it's 200-day moving average test. So that's, I'll check where that is, but I think it's just underneath the 70 level. Big. Not for any real reason apart from shits and giggles. Don't engage the new crazy guy, Big Real. He's definitely excited. I think he's on his last warning. Alright, let's have a look at some of the bank research today, boys, just quickly, and then we will wrap it up because I don't want to steal the thunder. I do believe the next stream coming up is literally only an hour away. Alright, everyone's on the bandwagon. Revisionists are coming out. All the banks are changing their view. I'll have a look as well, Big Real. We'll get up the text in a sec on the New Zealand. So Renzi's reiterated that he's probably not going to stay on as Prime Minister if he loses referendum. Some really good research put out over the weekend, actually. We don't have time to go through it all, but I really suggest that you guys sign up if you're interested at all in fundamentals to FXWW, even for 1 month, just to see if you like it. I mean, it's just something to do while you're waiting for your entry points. There is tacos. A few of you guys must have signed up because they haven't banned me from streaming their room. So I'm guessing that they're getting a few clicks through. Nick really should be an IB for them. So these are the big levels coming up here for the euro. It's going to get down to crazy town down here. I suspect we're not going to go easily below 105, so be very careful selling in the low 107s. Could get caught in a short squeeze. We don't have to tell anyone to be careful about buying dollar yen. Nothing reverses like the dollar yen. So this is much more linked to the stock market though. So if you see some stock selling, that will start the shortcut. So the longs bailing out. When they bail out, sometimes the market can overshoot to the downside. So if you're talking about what sort of level here the support is, the support's all the way back down at the 105.50. So you're talking about 200 point pullback just on the current rally alone. Alright, Homer. You can have a 1 hour little break, mate. 1 hour little break for you. I don't want you speaking too much during. There we go, son. Don't want you speaking to the new streamers. Little speech. So where we're looking at here this is a little breakdown point that got retested, and the reversal that we're likely to see it from these levels, or potentially could see. I mean, just makes sense on so many levels. So be very careful. US dollar strength, just general, any sort of headline which is negative will come through. Alright, dollar Swiss, this level here, this cluster resistance is held so many times. We've got to break that 100. That's what we're looking for here for the Euro Swiss. Aussie US, just support central. We're looking at the 200-day moving average, really close now, 75.10. But we came here for the Kiwi. Kiwi 200-day moving average is above 70. Alright, so we're pretty close, boys. We're pretty close. It won't look good on the charts to break that little fitted trend line. But, the attraction there is probably too much. If we have a little break below, I'd probably be looking to buy. But the RBNZ, they said they want to intervene when the market's selling, so keep that in the back of your mind too. I hate the Kiwi so much lately. Dollar CAD's really just raping ahead. I'd be looking at. I mean, look, it depends on oil. So oil, OPEC get an agreement. We're struggling to get much weaker. If oil goes sub 40. We could potentially be testing 140. It's pretty much that simple. This is that's very interesting there. It's getting a lot of attention as well. Euro yen grinding higher. The break higher here would really stabilize the euro. Euro yen's huge in terms of flow. Huge. Third biggest flow in the market. So, it's a major in its own right. If it's going higher, euro is probably stabilizing, dollar yen's probably smashing. And the euro pound, Homer's favorite. Support comes in around 84.59. Significant room to move still. I suspect though that the easy move is done. We're talking now the last 100 pip move in a retracement of 800 pips. Alright. So this is actually a really important debate going on in the market right now, and really important for the US dollar. So the 10 years is surging. It's broken above 2. Currently, these guys is targeting 2.5 at the end of 2007, Q1 2017. But they expect the market to reverse and for them to slump back to 135. Wow. That's basically pricing out any more rate hikes to do that. Alright, they believe if yields increase too much in the short term, financial conditions will tighten, resulting in less growth and a constrained Fed. They don't believe growth is going to be boosted enough by Trump's policy proposal to support the high yields. Okay. I mean, this is not directly related. I mean, it is directly related to FX trading, but it is not. I mean, this is stuff that you need to know so you understand what's going on with the US dollar right now. I'm just trying to see if there's anything there clear. I mean, Brexit is also huge at the moment in terms of the yields over there in the UK. So this is the long-term funds rate. So what they're looking at there is basically where they see interest rates returning to, and you can see that the Fed's been dropping that in recent times, in recent years, back towards those other long-term forecasts by the market. And that closing of the gap is, it's dangerous. It means that there will be less pricing in of any sort of inflation run, where interest rates, of course, are going to get above 3%. It's just we haven't seen inflation for so long that the market's so, I don't know, sort of neglecting the risks of it. Alright, I don't want to go overboard too much today. I'm just going to finish up with Dansky technicals. If you are a technical trader, this is where you can get your little summary for today. Recapping the trades that we're in just quickly before I leave it on that page. We're into some short pound Aussie. I think the pound rally is finished. Aussie should outperform. Selling into that rally there. I like the Aussie versus the Kiwi. I think the Kiwi is going to be pressuring downside. It's in one of those moods. Hopefully we can break that 107.50. Market at this point is not looking at it post RBZ cut, right? But no one's really looking at there was a Kiwi anymore. It's not frontline report news, but it has been grinding higher. And this is a dangerous sort of moves. If you're short, this is what scares you. And this is when the market actually does a lot of its moves, when no one's watching. And the other trade that we're in is Euro Swiss. We bought the 107. Looking for that to stabilize and just meander around, make a new range at least. And using a stop below the Brexit low. Gabaram. I have Reuters as well. So Reuters is like a news flow service. But for the purposes of what traders need, you can get away with reading 2 or 3 reports a day if you focus on only 1 or 2 trade, sort of pairs. If you focus on a lot of pairs, it's harder. You've got to do a bit more work. Got to check a few more things. Alright guys, good luck with your trades. I'll be back tomorrow at 9 GMT. If you want to, if you want me to look at any particular pair, or if you're watching this in YouTube, come across to Forex Signals. If you want me to look at a particular pair, send me a PM. We can look at that tomorrow. Other than that, I'll be sticking around to watch a new educator have a little webinar. It should be good.